Welcome to TradeTheNBI.com. This is John. This report is for the 17th of September. And again, we supported right off the ABM yellow. We dipped slightly below it, and some of that was just the little carry through that we were talking about. We've been in a generally weak stance overall. We had further decay of short-term buyers, shorts increasing within this, but still holding on generally simply because we've had pretty solid long-term buyer support here with the red DOC. That's starting to fade a little bit coming off this, so we're going to have to see if we get a stronger response to the short side. Otherwise, this little uptick we're seeing in midterm buyers could turn around and produce additional P3 move right here at the top. So plenty of support still there to keep the market going, and now with the added shorting interest in there, you get a little bit of activity, and that could really punch things significantly higher. So we'll see if the stabilization of the political situation, that there isn't going to be, Middle Eastern war kind of thing, certainly bolstering support for added interest in equities, given the fact too that with the idea that there potentially is rate cut coming, equities are the only place really to be. Likewise, similar readings from the NQ right here, almost identical. In fact, it may be just a little bit stronger, even though it's slightly behind where the S&P is. From a euro standpoint, again, it's critical for them to try and push the euro back up, at least to aid trade from a foreign standpoint. Critical element of it here is whether or not the Fed is going to continue to jump in to keep the euro afloat during their turmoil, because the reality is it's a disaster over in Europe as far as economics and coordination, particularly with all of the rebel situations. It seems though that the Italy situation has stabilized since they've removed the obstacle of an additional member of the EU wanting to depart, at least in the short term. And of course, if Britain doesn't get new elections, that actually should be a strengthening idea that they're not going to make it out of the EU as well, or if they do sign a deal, it'll just basically be a pretend situation. So, but not enough confidence yet. That's meaning money is still flowing to the US, which also improves equities. So oil did its expected shoot up here, broke out of the range, and that the question really is going to become how long the outage for the Saudis will be. There was enough of a glut that may not be too lasting, and the question will be whether or not the U.S. can make up for some of that downfall in the interim. But certainly it's going to lower stockpiles, which should keep oil slightly elevated in general going forward. Now, if there was this major reduction in economic growth, wouldn't cause any impact whatsoever. So that it is making an impact means that there's still enough demand out there. Gold didn't really make a huge push because, again, if oil stays up for a while, I would expect it to move much stronger. We had the dip below the red line that needed to be filled, which did get taken care of. And even on that dip back to the low, we didn't dip lower on the extremes. So let's get some support right there. Intraday, it was pretty modest given what we had. We had the early decline built up, some sell signals came in, we had some retraces from that. And again, it was right back at the same area I was talking about, the 29.94, and that held every time it was tested. Even in pre-market this morning, it was the same area that saw support and has bounced off, but then keeping us right above that 3,000 level. And that's going to be continued the focus. Again, the issue is below that 94, there's not a whole lot underneath it. So you have a much bigger range if that support level breaks. So something to keep an eye on when you're looking at your trade in between. If that 94 breaks and you don't have buy signals underneath there, there's a significant range below that can be filled in below that. So that's kind of where we're at. All in all, I think it's pretty tame given the uncertainty of some of these issues, and that's just because there really isn't an alternative investment in a reduced interest rate environment, because equities are going to have to be the play since you're not going to get it from bonds. So there we have it, the long and the short of it. As always, though, I will keep putting up additional details, and very close to being able to get out those changes I've made to the P2 and some of the configurations on the adjustments. And a lot of those will include the biggest difficulty ones, which are buys like this where you dip down in a single move and you don't have an alternative second P2 in that until much later. So been grappling with that one, but definitely using it within the extreme and the retesting of a portion of that low as the strongest catalyst for buy signals that come in here in this particular case. That occurs on the retest, and we get green over cyan in this case with a rising red DOC, and that's exactly what that led to the peak move, which really wasn't a whole lot of movement, but nonetheless it was still accurate to that point until DOC spread here after the dip below the red line, and that rolled over, and that's what created the pre-market move to the south, and it just gave us a nice reset right here of orange below red, and then the rising red DOC and green at the same time crossing. So when they all crossed together, that was enough to give it a little boost. That we don't have a dip below the red line means that it can actually continue. We'll see if there's inversion, looks like taking place right here. That's steel below cyan, and green moving back below, and then a rollover. I look at the peak of this move right here of the red DOC, minus 243. So I would look for this red DOC at -4 to break past that in order to expect a continuation. If it doesn't do that, then unlikely you're going to get a big improvement. As always, though, trade well, and we will talk again later.